Hello, everyone. Welcome to our latest Competition and Trade Bites podcast series, a series from Rajah and Tann Asia's Competition Antitrust and Trade Practice. This is our fourth podcast. Our previous podcast had discussed various competition issues, including mergers and distribution. Here, we touch on a trade topic with a specific focus on free trade agreements, or FTAs for short. FTAs are great enablers allowing for business growth. If used effectively, they can allow small businesses to have a greater reach to a wider customer base across countries. They allow for better supply chain management too. Yet, if not used well, they can be a bane. We explore this and more in this podcast. My name is Anandarajah, and I lead the Competition and Antitrust and Trade Practice in Singapore. And I am your moderator for the session today. I am joined today by my colleagues from Indonesia, Malaysia, Vietnam, as well as my fellow partner from Singapore. They are Anastasia, or Prita for short, Tracy, Dui, and Tanya. We kickstart with a basic question. Why should businesses be interested in FTAs? What benefits can FTAs bring to businesses in ASEAN? Prita, could I trouble you to take this, please?
No problem, Kalam. So thank you for the question. But to answer your question, let's first start with the very first intention of the FTAs. So they are made by and between countries on a mutual basis understanding with the ultimate purpose to enhance the welfare of the participating nations. So these are usually achieved by facilitating the cross-border trade through, for example, lowering or even exempting the tariffs of agreed products between the participating countries. So the underlying idea of this facility is the comparative advantage of a country, so that through the FTAs, one country may trade the national champion products or sectors to the participating nation in a more favorable terms compared to the non-participating nations. And reciprocally, they may open up their trade on certain agreed sectors to the FTA's member nations. Thus, bearing everything that into mind, businesses can always very well benefit with these reduced tariffs to market their product overseas in a lower price. So this may help businesses to expand their market or to establish their product presence in the member states. And businesses from ASEAN member states or businesses who wish to enter to the ASEAN member states market can surely also reap this benefit, Kala.
Many thanks, Prita. Tracy, could you share what some of the FTAs that businesses in the region should be aware of?
Sure, Carla. Let me share on some of the key regional FTAs entered into by ASEAN member countries. First, I'll start off with the ASEAN Trade in Goods Agreement, or ATIGA for short. This is the main FTA that aims to achieve free flow of goods between member states in ASEAN. Through the ATIGA, Brunei, Indonesia, Malaysia, Philippines, Singapore, and Thailand have eliminated intra-ASEAN import duties on approximately 99.65% of their tariff lines, whereas Cambodia, Laos, Myanmar, and Vietnam have reduced their import duties to approximately 0 to 5% on approximately 98.86% of their tariff lines, and almost 90% of these tariff lines are actually already at 0%. Next, aside from the ATIGA, ASEAN member countries have also entered into FTAs with various other dialogue partners, including Australia, New Zealand, China, India, Japan, Korea, and Hong Kong. So in this session, let me just very quickly give it one example of one ASEAN plus one FTA, which is the FTA with China. The ASEAN-China Framework Agreement on Comprehensive Economic Cooperation was signed at the 6th ASEAN-China Summit in November 2002 and was since implemented in January 2010. A large element of the ACFTA is the Trade in Goods Agreement, which then laid down the modality for tariff reduction and eliminated tariffs for 3 categories of normal, sensitive, and highly sensitive product lines. Most tariffs for normal product lines have largely been eliminated, whereas tariffs for sensitive product lines have been reduced to about 0 to 5%, and highly sensitive tariff lines are at about 50%. Now, aside from the ASEAN Plus 1 FTA, ASEAN member states have also entered into multilateral FTAs, and one being the Regional Comprehensive Economic Partnership, or RCEP. This is the most recent multilateral FTA entered into between ASEAN member states and other countries such as Australia, China, Japan, South Korea, and New Zealand. And almost all ASEAN member states have ratified the RCEP, except for Indonesia, Myanmar, and Philippines. And Malaysia is actually the current most recent country to have ratified RCEP. Back to you, Carla.
So Tracy, really when we talk about the ASEAN FTAs, we're looking at multilateral FTAs. Now, other than the ASEAN Plus 1 FTAs, what we note is many of the countries in Southeast Asia have also entered into FTAs at a bilateral level. These include Singapore, Malaysia, and Vietnam. Using Vietnam to illustrate the point, Thuy, could you share insights into the FTAs that Vietnam has entered into, please?
Yes. Hi, Carla. Vietnam has maintained a very widely open policy, and it is very active in negotiation of FTA to enhance trade. As of July 2021, Vietnam has signed 15 FTAs, including 6 bilateral FTAs. Particularly, Vietnam has entered into bilateral FTA with Japan, South Korea, Chile, and UK. Apart from the traditional bilateral FTAs, Vietnam has also concluded FTAs that are considered new generation of FTAs, such as the FTA with supranational entities like EU, Eurasian Economic Union, which includes the country states such as Armenia, Belarus, Kazakhstan, and Russia. Vietnam has also entered into 9 multinational FTAs. Besides the FTA with ASEAN Plus, Vietnam has also entered into CPTPP and RCEP. Currently, Vietnam is also negotiating a number of other FTAs, including the FTA with Israel, which is a bilateral FTA called VIFTA. The negotiation has begun since 2015, but it has been slow due to the COVID pandemic. Also, Vietnam is working on the FTA with a group of countries, including Switzerland, Norway, Iceland, and Liechtenstein. The negotiation has begun since 2012. As a result, the Vietnam economy has greatly empowered. According to the information of MOIT, the implementation of FTA has, along with the joining to WTO since 2007, have contributed to boosting Vietnam's GDP by more than 300%. Import and export turnover has boosted by around 350%. Specifically, imports and export to the new 2 markets, Canada and Mexico, have increased by 20% and 46% in 2021, respectively, because of the implementation of the CPTPP. Back to you, Carla.
Many thanks, Thuy. That's really an amazing number of FTAs that Vietnam has entered into, and it's incredible how it has helped the country boost its economy. Now, everyone, you have heard quite a bit on FTAs. FTAs, as we traditionally know them, are intended to aid in physical trade of goods and services. With the increased trade through electronic means, digital economy agreements, or DEAs for short, are slowly becoming common. On this front, Singapore has also recently concluded a number of DEAs. Tanya, could you tell us a little bit more about these, please?
Sure, Carla. So as you may be aware, some of our FTAs, like those mentioned by Tracy and Thuy, already contain chapters on e-commerce and electronic trade documentation. Digital trade agreements are treaties that focus on establishing digital trade rules and digital economy collaborations between countries more specifically. Singapore has, over the past 2 years, entered into a number of digital trade agreements with countries such as Chile, New Zealand, Australia, UK, and South Korea. Some of the key clauses covered in these digital trade agreements include provisions on eliminating customs duties on digital products, paperless trading, online consumer protection, personal information protection, cybersecurity, cross-border transfer of information, and liability of intermediary service providers, just to name a few. The aim really is to promote open transfer of information across countries so as to facilitate digital trade and e-commerce while imposing safeguards for consumers in areas like consumer protection and personal data protection. Back to you, Carla.
Very helpful, Tanya. Thank you. Folks, you've now had a rundown about the key FTAs that are available to businesses in the region. Perhaps one question that is on many businesses' mind is what next if I want to try and leverage off FTAs for my business? What should I do? Prita, could you please guide us through this?
Yeah, sure. So consider this. The FTA, it's like any other treaties. It only applies among its member states or the participants. So businesses who wish to make good use of the terms under the treaty are better to consider the rules of origin. This rule of origin will help determining the nationality of the imported goods. This is very, very crucial since the FTA's benefit can only be implemented to the imported goods from particular countries. But unfortunately, there is no universally accepted one single set rules of origin. So countries are free to adopt their own criteria to determine the product's origin. But it is commonly understood that harmonization, at least on the regional level, will have a tremendous positive impact to the trade. So if we're speaking on the ASEAN scope, among the ASEAN members, countries adhere to the rules of origin set forth under ATIGA. So under the treaty, the origin of goods is determined by the country where the good was obtained or produced in. So different type of goods has different criteria. But to take some key points, some important factors are, first, where the product's processing took place, then where the raw materials come from, and third, where the good is exported to. This entails varying levels of complexity when it comes to determining its country of origin, especially if we consider to how different countries or regions may have different criteria. For example, businesses must consider the rules of origin in EU countries, let's say France, if they wish to export goods from Indonesia to France. This is why the harmonization, as we mentioned earlier, is really, really highly beneficial to trade. One such effort is by having what is called the Harmonized System Codes or the HS codes. In many countries, the traded goods are classified with the designated H codes. So these codes are integrated with the data from other countries and is used by the custom authorities around the world to identify and also to monitor the traded goods. So with this HS code, the authorities can easily identify the origin of the traded goods and therefore grant the appropriate tariffs and whether it is actually can be included in the FTAs. So before sending off shipments or even signing a sales and purchase agreement or supply agreements, it will be very, very wise for the businesses to first correctly identify to which HS code do the products fall into and whether the product meet the rule of origins criteria to benefit from the FTAs. Back to you, Kala.
Thank you, Prita. Prita has taken a deeper dive into the trade issues. A key element of trade across borders is the concept of rules of origin, a very important one. What are some of the key points that businesses need to be aware of when trying to determine if their good is originating? Tanya, if I could trouble you on this one, please.
Sure, Carla. So there are generally two ways in which a good will be deemed as originating from a certain country. The first way is when a good is wholly obtained from that country. A simple example would be a plant that is grown and harvested in the country. Clearly, in that example, the good originates from that country. The second way is when the good undergoes substantial transformation in that country. This can happen and be shown if there is a change in tariff classification of the good. In other words, The HS code of the product being exported is different from the HS code of the non-originating materials that are used to produce the good. Another way is if a certain percentage of the goods value originates in the countries to the FTA. Typically, the threshold is at least 40%. We call this the regional value content or the RVC method. Or, in the case of chemical goods, if the good is produced through a specific chemical process as stipulated in the FTA. But as Prita mentioned, the rules of origin can vary from FTA to FTA. The key points that businesses need to be aware of when trying to determine if their good is originating are: first, to ensure that the materials are properly classified and they have determined the HS code correctly, just like Prita mentioned. Or if they are using the RVC method, that they have used the correct figures to calculate the value of the good and the value of the originating materials, labor, etc. Then, that the business keeps the proper records regarding the prices of goods, prices of raw materials, originating status of raw materials, and also obtain the supporting documentation from vendors to prove this. It's also important that the information is kept for a number of years based on the specific record-keeping obligation under the FTA. This is in case of an audit by the authorities. It's also important to ensure that the relevant values are updated if there has been a change in the prices of the good, the price of the raw materials, etc., and for the company to stop claims for preferential treatment if the good no longer fulfills the originating criteria after these changes. We have seen some clients trip up on the above issues and run into problems when there has been an audit. So these are some key points that I think businesses need to be careful about.
Tanya's comments make clear that it is not as simple to ascertain if goods are originating. It calls for a careful review and, if necessary, discussions with experts to ensure proper calculation and structuring. Indeed, this is an area that we do receive many questions on and advise on. There are additional issues. Tracy, could you please share what some of the potential challenges that businesses would need to be aware of when seeking to make use of FTAs?
Sure, Carla. Well, the first key challenge businesses face is the issue of determining which is the most appropriate FTA to apply when considering the import and export of a particular product line. So when making the determination of the most suitable FTA, the first consideration businesses think about really is which FTA has the most attractive tariff rate for the products in question. But the consideration actually does not end here. Businesses must really also consider whether they can comply with the rules of origin under the FTA to qualify for that attractive preferential tariff rate. So in that particular situation, all the factors discussed by Prita and Tanya earlier would really come into play. Further, businesses should also really consider other compliance requirements and whether they can comply with those requirements under the FTA, such as what are the supporting documents required for submissions in order to obtain the relevant preferential certificate of origin, in order to qualify for the preferential tariff rates. Aside from that, a second common challenge faced by businesses is a language barrier issue. This really should not be underestimated, as there are times when certain information provided by relevant government ministries may only be available in the national language of that country. For example, if a Chinese exporter would like to understand some nuanced information, such as what Malaysian customs officials would require to see on the import of goods into Malaysia for there to qualify for preferential import tariffs, the exporter could potentially face frustrations as the publicly available websites could have limited information available in English, or conversations with officials may need to be conducted only in the national language. So these are certainly some challenges to keep in mind. Back to you, Carla.
Many thanks, Tracy. The point of local language is very important, and hence working with local experts is critical. Having set out some high-level views, I will stress that FTAs and DEAs can be beneficial, but ensuring proper compliance is important. It is technical and can be document heavy. What then is the kind of advice you will need and can obtain when wanting to avail yourself of FTAs? Dway, can you share your experience in advising your clients on the use of FTAs, please?
Yes, Carla. First of all, I think that from the Vietnamese law perspective, I would totally share same views and issue as discussed by our other colleagues for Indonesia, Singapore, and Malaysia. For us, most of our clients would concern about the tax incentives, custom procedures from the countries that do have FTA with Vietnam. Also, the client would concern about the eligibility for enjoying tax preferential, such as determination of the origin of goods based on the rules, such as the rules of CTC, LVC, and RVC under the FTAs. We may also note that Vietnam authorities enforce FTA by codifying them into the domestic laws for implementation. For example, the Ministry of Industry and Trade, MOIT, issued Circular 03/2019 to guide on the rules of origin under CPTPP. They also issued the Circular 07/2022 to guide on the trade remedies under ASEP. As a recent example, the MOIT has just issued Circular 05 to guide on the rules of origin under ASEP. So basically, these domestic legal documents are issued to localize the respective principles under the relevant FTAs. For example, the rules of origin and trade remedies. The legal documents also issued to guide on the regulations and procedures for implementation of the regulations and principle. For example, to guide on the procedure to apply the certificate of CO. Also, to review the local law as well. We also observe that bilateral FTAs would normally offer the incentives that may be more favorable compared to the multilateral FTAs. Therefore, it is generally suggested that the clients may also look for the opportunity for the application of the incentives under the bilateral FTAs if the incentives are more beneficial than granted under the multilateral FTAs. Back to you, Carla.
Dway, thank you. Everyone, my colleagues in the various other countries have also been asked to advise on similar issues. Separately, where a country can be an important source of raw materials and tied to one which has a strong manufacturing arm, is a classic area which calls for the use of FTAs to level up businesses and countries. But what if there is non-compliance with FTA requirements? Tanya, we have seen quite a bit of this in Singapore. Could you share your experience, please?
Sure, Carla. So one thing to note is that the FTAs usually allow for a verification process by the importing country. This is like an audit process whereby the importing customs authority can subsequently ask the importer or exporter for information or documents to prove that the good was indeed originating and therefore eligible for preferential tariff treatment. So we have seen and helped quite a number of clients involved in this process. It will require the exporter to provide proof and supporting documentation, and sometimes even a physical inspection of their factories. If there's really been a mistake, in Singapore there is a voluntary disclosure program whereby traders can voluntarily disclose their errors to Singapore Customs in exchange for lower penalties. We have helped a number of clients make a VDP to Singapore Customs for FTA violations. That's on the regulatory side. On the commercial side, it's recommended that the company carefully manage the process with their customers. If the customer is now liable for extra import tariff due to FTA non-compliance by the exporter, the customer would understandably be unhappy about this, and this can damage the relationship between the exporter and the customer. We have seen in some cases where the exporter would discuss with the customer and take responsibility for paying the extra import tariffs. In some cases, there could be contractual provisions on this. Back to you, Carla.
Many thanks, Tanya. We know this is a heavy topic, but needless to say, a very important one. It is not just where countries serve different roles, but also where there are supply chain disruptions. A bit of pain now in getting your structuring right can save you considerable pain as well as economically moving forward. It is an area worth looking into. We hope that you found this session useful. Views were shared by my colleagues Dway, Prita, Tracy, and Tanya. Please feel free to drop any one of us your feedback on this session or provide us with suggestions on what you would like us to discuss on our future podcasts. Have a great day, everyone.